Alright, I just lost the file I just recorded, so this one's going to be a lot more shorter than normal. I'll talk about always in, trading small, and a trade I took. For always in, bears sell, but then trading range, probably best to get out. If a bear, probably always back to always in long. I don't think we ever became always in short. We tried. Bears get out. I'm sorry, bulls get out. The bulls have to get long again. Here. If the bears get out, I would not. I think the bulls got to get long again. If bulls get out, the bulls got to get long again. Same thing up here. I think bulls get out and give up bar always in short. So trading range, probably going to test this high, because if you buy it here, buy 4 or 5 points lower, you'll make money. This is a broad channel. It's a trending trading range day. Just look at the day. And you can divide it up into 3 little pieces. And notice every box. If you notice, there's little thin areas. There's a thin area and a thin area. Anybody that's read Al's books, he used to refer to that term a lot. He doesn't as much anymore, but he still refers to it. And it's just simply, as simple as it sounds. It's a thick area, thin area, thick area, thin area, and back to a thick area. Thin area means, when you get a trading range, you break above it, and you go sideways again. Eventually, well, let me start over with that. So why, if you notice, we broke out of this trading range to the upside, formed an upper range. So we have a lower range, and we have an upper range. Then we sold back off into the lower range and ended up closing in between the lower range and upper range. Why is that? Well, a few reasons. The easiest reason is, I'll explain the math in my opinion behind it, but first, let me just give you the simple reason. When you get a breakout, so you're thinking, trading range day, I think we're always in long. The bears probably need 1 good bar, maybe 2 good bars. So the bears haven't done enough. Always in long, we'll probably get a breakout up or down. And bulls got the breakout, so probably going up for a measured move. It's basically a failed double top, bull breakout. And so here's the thing. Right here, we got a breakout, bad follow through. So you got to be thinking possible trending trading range day. The reason that happens is, well, if I buy this close, put a stop down here. Price is going sideways, going sideways, going sideways. By here, it's about 20-ish bars. I wouldn't reset. I wouldn't say this was the pullback and now we have a new breakout, because it's still within the range of this whole thing. So eventually, when you go sideways for long enough, the probability of more up becomes 50-50, as the probability of more down is 50-50. In other words, what was 60% up slowly becomes closer to 50-50, which means what was 40% down slowly becomes closer to 50-50, and then it eventually becomes better for the bears. So if you think about it, eventually the bears think, yeah, this is probably a trading range day. We have a gap here. We should probably close the gap. So if I look to sell this high and use a stop, something like that, a measured move up. So I sell this high, stop up here, betting on a 1-to-1, I'll probably make money. And that trader would be right, because kind of what I'm talking about. Price usually, trading ranges are an area of agreement, which means they have a magnetic kind of pull to them. So they often get retested and fall back into that trading range. Possible final flag, broke above it, turn back down. Strong enough breakout for a second leg. We got our second leg, but look at this. This was weak. Bad breakout, bad follow through, tails on the bottom, so probably going to test up. And so yeah, so real quick, I discussed it in my prior video, but it got deleted, so I will rediscuss it. Someone asked me if I could point out a few trades I took and why. And so what I'll do, I'll make a deal. I'll point out, you know, one or two good trades, maybe in one or two bad trades. Okay? And with that said, is I just want to share this before I do that. I'm not here to prove to anybody how my trading's going. Personally, I like being discreet about trading. I don't really, and by discreet, I like to go about my day, you know, trade and continue on with my day. I make these videos because they're enjoyable for me, and, you know, first and foremost, I get enjoyment, and second, maybe it helps people, which I hope it does, but at the end of the day, I make these videos for myself. That's, you know, that's just, I don't mean to seem rude or kind of cold about that, but, you know, I genuinely do want to help people, or try my best, but, you know, I've said it many times, if you really want to learn this or get better at it, you shouldn't pay attention to me, you should pay attention to Al. And if you don't know who Al is, or Al Brooks, you need to go to anywhere on my channel, click the About, and click on one of those websites, the Brooks Trading Course, Brooks Price Action, and get informed, because I think he's the best of the best when it comes to trading. So anyways, I'm not going to show my trades. I'm not going to show any of that because, number one, I don't want to feel like I'm competing or having to prove myself. And it's hard, you know. It's just, I've grown accustomed to, you know, I've never seen Al's trades. I know he trades every day. And the reason I know that is because, you know, if you listen to him long enough in the trading room, you'll understand that he's pointing out everything that's happening, so it really wouldn't make any sense for him not to trade. That'd be like being somewhere saying, if you buy here and put a stop down here, you'll make a measure move up. Well, it wouldn't make any sense to point that out and not actually do something of that nature. Anyways, though, I'll be happy to point out some of the trades I took and some mistakes and why in the management, as long as, you know, if I start getting comments about showing my trades or something like that, then, or proof of those trades, then I'm just not going to do that. I'm not going to talk about my trades. You know, I like to be discreet, and that's just because I see it as more of a hassle than, you know, it'd just be more of a hassle for me. And so yeah, so if anybody wants me to elaborate as to why, I'd be happy to, but anyways, well, I'll just continue. So, a few things I did. I think this close scalped out for like 10 cents or something like that. I traded the spider, I didn't trade the Emini. And I think I bought a half size position, put a stop down here. I was going to scale in. You know, as long as it didn't go always in short, I was going to scale in. I bought this close half size, prepared to scale in. Bought somewhere, maybe below this low, I don't remember. But I wanted to see, after this bar, I wanted to see the sell off, and it looked weak, so I just ended up adding on more. I think I took all off at, I think this close. And I missed this whole sell off, and I sold I think this high, prepared to scale in, scalped out. And what else? Ended up, here's one mistake I did make. Ended up buying Apple. I bought this close stop down here, trading small. Thought about scalping out, but didn't. And I ended up exiting my position at this close. So I bought here, I think I exited the close, something like that. The one mistake I should have scaled in, but I didn't. And for Facebook, I only traded stocks today. I got long during somewhere in here. Scalped out part, bought more, I think over here. Scalped out. And I sold somewhere in here, but ended up scalping out for like hardly anything. It's like 20 cents. And management, is pretty. I sold small, stop up here. I debated selling up here. Tight enough channel, should get a second leg and a retest of this low, but I didn't do it. That was a mistake. And I thought about buying this low, but did not. That's really all I did, I think. Oh, and I sold this close, stop up here, scalped out, I think, somewhere over here. Reason for that was strong enough breakout will probably test the low of the channel. First left should fail. What else? But really, I mean, here I'll point. I made a mistake yesterday though, so I'll kind of talk about that. So I ended up selling down here, and it was huge. I wasn't really thinking, and it was a mistake for many reasons. Number one, bad close, weak sell off, bull breakout. But look where we are. We're at the low of this breakout. So always in long. When you usually, so let's say a bull buys this close, put a stop down here. Well, whenever you hit a stop, a logical stop, so bulls buy, they get out. I think if a bull did get long, they get out somewhere in here. But if they didn't, sometimes when you hit a stop, more often than not, 50-50 chance, price falls below and turns up. So, my biggest ended up getting out, I think, somewhere in here for a loss. So I sold, ended up getting out, and then going long and going for a swing. But reason it was a mistake was because this looked like a bull flag, and it looked like we were going to retest the high. And then we broke below. But we got bad follow through. It's a trading range day. I should have expected some sort of a deep pullback. So I really, when I saw this tail, I should not have sold. There's something else I did yesterday too. Maybe it was on the, I can't remember. Alright, well that's really all I have. Comment below, or send me a message, email me if you have any questions, and I'll try and get back to you. Alright, thanks. Hope everyone has a good evening.